off a collection on your credit report. Hey everyone, it's Joe Bladek for another episode of Canadian Mortgage Weekly right here. So before we get started today, thanks for joining us. My name is Joe Bladek. I'm a mortgage broker that serves all of Ontario virtually and Simcoe County, which is Barrie, Orillia, all in person. So if you're looking for a mortgage, please do contact me. I can help you get set up with the right mortgage that can match your financial goals today. So before we get started into what we're talking about today, why would you want to pay off a collection? Well, usually a collection item is something that is affecting your credit score negatively. And a lot of times you can't really get a mortgage, especially a mortgage with a great rate, without getting the collection removed off your credit report. So a lot of times clients do say, well, I don't want to pay off the collection and it's not really my collection, or there was a misunderstanding. Well, the lender doesn't care. They see the collection and they see that, they don't want to have the same misunderstanding that that other debtor did. So it's really important to not even have a collection on your credit bureau in the first place. So what happens when you pay off a collection? Well, that debt will actually stay on your credit bureau as a $0 paid collection. So the balance will remain zero. The collection will actually still remain on your credit bureau. Well, there's actually a strategy I have to help you with this, because if it stays on your credit bureau, you know what's going to happen? It's going to actually affect your credit score negatively still, even if it shows as a $0 pay collection. So I got a strategy. I'll get into it at the end of this episode, but before we get to the end of the episode, I have some mortgage news to highlight for you. There are some new updates that have come out. Let's get right into that today. So one of the first things that I've been seeing actually is that 5-year fixed rate mortgages have been coming down. And that's actually illustrated right here. 4.69% for a 5-year fixed rate. Now, last week when I had this episode running, it was 4.99%. So what does that mean on a $500,000 purchase price with a $25,000 5% down payment with a $475,000 mortgage? That means the monthly payment now is $2679.40. And the biweekly payment is $1236.67. That's actually about $100 less than last week. So really awesome to see. 5-year fixed mortgage rates haven't really changed on the refinance side. It's a little bit different how that works, but really interesting to see that the 5-year fixed rates on the purchase side have been coming down. So 5-year bond yield, right now it's sitting at 2.814%. That's as of this morning. We've taken a look at this bond yield here, this low point. That is actually August 2022. We saw a bottoming out of the bond yield here, and 5-year fixed rates actually dropped quite considerably right around this time, helping the fall market. And all the buyers looking at getting into the fall market time their pre-approvals perfect. So they got that little window of 5-year fixed interest rate. Well, right now we see this. Is this bottoming out right here? Do you think that 5-year bond yield will continue to go down? If it does, 5-year fixed rates will continue to go down lower. However, if it does not, this may be a good time to get a pre-approval. Maybe this lowering of the bond yield will help spark everyone looking for a home right now to get a pre-approval and help the spring market, because you don't want to get a pre-approval when you're up here. That's quite a high rate. But with the 5-year bond yield going down like this, we could see 5-year fixed mortgages continue to go down. All right, inflation rate. What's happening with the inflation rate in Canada right now? Well, inflation is very high right now. We saw 8.1% inflation rate in June of 2022. It's been slowly decreasing, however, still very high. We're still seeing grocery prices very high and increasing. However, across the basket of goods that inflation is measured, it is actually going down at a very slow speed. As you see, 6.3% as of December 2022. That is between February and March of 2022's inflation rate. So not as low as we'd like to see. Obviously, the Bank of Canada is aiming for a 2% inflation rate. However, with 6.3, this may indicate that the rate increases on the Bank of Canada are working. but it may not be enough. What do you guys think? Do you think the Bank of Canada will increase rates on January 25th to further slow inflation, or do you think they're going to be happy with a 6.3%? All right, looking at the American inflation rate, it's been going down as well, but still very high, 9.1% in June, the high of 2022, 6.5% in December of 2022. This does indicate a lowering of inflation. That is the lowest inflation rate in the United States compared to all of 2022. All right, CDOR rate. I use this metric actually to help my clients determine whether or not variable rates are a good pick in regards to the difference between fixed and variable. Well, usually when the variance to prime is over 2%, it's a good time to consider variable strongly. When it's under 2%, it's a good time to consider fixed strongly. However, it's still always supposed to match what your financial goals are and home ownership goals are, because there are some instances in which variable rates will still remain best for you. So looking at this graph, as you can see, we were going up quite considerably. This was when the variance was shrinking, and the variance has been shrinking at a slower speed since about October of 2022. This actually marks the October 25th rate announcement right around here, so really interesting to see that. All right, what do we have here? Well, right here we have a prime rate update. So what's happening with prime rate? Right now we are sitting at 6.45%, which is quite a awesomely high rate actually. Maybe too high for a lot of folks. I know a lot of folks have been waiting to get into the market because the rates are so high. And with a prime rate of 6.45%, that is actually higher now than the 5-year fixed rate mortgage. So with the 5-year fixed rate mortgage now for a 5-year purchase being at 4.69%, the prime rate's actually almost 2% higher than the fixed rate. So quite interesting to see that. Where do you guys think prime rate's headed on January 25th? Speaking of January 25th, that's actually the next Bank of Canada rate announcement. That's happening Wednesday next week. We'll be showing that rate announcement and disclosing it right here on the Canadian Mortgage Weekly episode 119. We'll be going over the news articles that have led up to the rate announcement, what we think the rate announcement is going to show, and what their decision may be based on all of that. So we'll do a pre-rate show beforehand. We'll start around 9:45, keep going until 10 a.m. where we announce the rate announcement for 10 a.m. and the current overnight rate sits at 4.25%. Last time we saw an increase of 50 basis points. So what do I think is going to happen? A lot of people are asking me that question. Well, with the inflation numbers being now at 6.3%, which is a drop from 0.06 drop from 0.6 drop from 6.9%, that may be enough for the Bank of Canada actually to increase rates at the 25 basis points level at this moment in time to keep that inflation number going down, but not be too aggressive on interest rates. We may see a pause on the interest rate increases this month simply because January tends to be a very hard month for folks financially. We have Christmas credit card bills coming in. We have property tax bills coming in for those who pay property tax on their own. That's something to consider. So with that, also house prices. What's happening with the average national house price in Canada? Well, as you see in 2012, it was coming along. 2016, we had a little bit of an increase here. Obviously, in 2020, we saw this huge increase. We saw a over $800,000 average national house price. But now we're sitting at $626,318. That represents actually a 1% drop in comparison to November of 2022. That is 2 months in a row we've seen property prices decline, 2% in November, 1% in December. What do you guys think will happen in January? Will we see continuation of house prices dropping, or will we see house prices growing with the spring market just ahead of us here? Be interested to see what you guys are thinking in the comments below. But in the meantime, let's get back to the collection issue and what happens when you pay off a collection. Well, when you pay off a collection, say you have a $500 collection with a telecom company, is quite frequently I see that actually on credit bureaus, whether it's one of the top 3 or 4 telecom companies. Someone didn't pay their cell phone bill and went to collections and they got a new cell phone and just forgot about the old cell phone contract. Well, a lot of times what I like to recommend to my clients, because actually paying off that collection in full, if it's on your credit bureau, it's actually going to still remain on your credit bureau and still affect your credit score in a negative manner. The best way to do it, because it's actually going to show as a zero balance, so the lender and I will see that there was a collection, it's been paid. We'll see the date the collection was registered. We'll see how long it took to be paid. We'll see the creditor. We'll see the debt collector as well that was hired. All that information actually remains on your credit statement. So what should you do actually to fix that for yourself? Well, there's actually a strategy I like to employ, and for that actually, I like to recommend that you make an agreement with the creditor to do a pay and delete, which would mean that if you pay off the collection to whatever balance you agree to, say the $500, that they will in exchange remove fully that collection and delete it off your credit bureau. I always recommend to get this in writing from the creditor. And that way, when you do your payment of this collection, they will actually remove all evidence of the collection from your Equifax TransUnion reports. And with that, all the negativity from that collection will be removed. And it's a win-win situation. The creditor does get their financial, their finances in order by having you pay back the account, and you have your credit score in order and protecting it by have that creditor and that collection removed off your credit bureau. If they won't remove that credit score, the credit collection, which does sometimes happen, maybe the person you're talking to does not want to agree with that, or they won't allow that that particular telecom company, then another thing you can do is actually dispute the collection and see where that goes. If you have any questions about how to do this, I've helped some clients do this, and you can give me a call at the number or email below, or schedule an appointment with me through the link description below. I'd love to help you. If you're applying for a mortgage and you have a collection and you're wondering if I should pay it or not, let me know. I can walk you through this process and help you with that. So again, thanks for watching another episode of Canadian Mortgage Weekly. This has been episode 118 with your host, Joe Bladek, your local Ontario mortgage broker, helping Ontarians get mortgages all across Ontario virtually and meeting people in person in Orillia, Barrie, Simcoe County there. And this is Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. Please subscribe, like, comment, share. We'd love to hear what you think. And if you have any suggestions for our next video topic, please leave a suggestion below. We'd love to hear what you guys think we should talk about next. So thanks for watching.